Alright, so today is Monday, October 14th, 2024. I was trading the NAS100, and I posted a community post, and I felt like it was pretty detailed, and it was a lot, but I wanted to explain it in a video version breakdown to help myself out and others who may see it as well. I mentioned that price broke out in New York. This is price breaking out here. Even prior to that, it was already going up. But this red line, this red box, is the pre-hour in New York, starting at 8 a.m. At 9:15, it was a 15-minute pullback. Pullback candle is normally a signal for me to start looking for, like, if I get a 15-minute pullback in the a bull market, if it's going up, like this example here, price is going up, and you get that one candle that pulls back against price, that's a signal for me to drop to the lower time frame to look for an entry to buy lower instead of chasing price buying it high. So I had the 15-minute candle here, as you can see, it's circled. The low of that 15-minute candle becomes support for me, and I look for a W on the 1 minute to buy low. That was a 15-minute pullback there. It started at 9:15 and it printed at 9:30. 9:30 is when New York opens, which New York Open, there's a lot of volume behind 9:30 New York Open. I normally don't really trade 9:30, and that's when you can see this horizontal line here is the low of that 15-minute candle. The circle, the red circle, is the 15-minute. You can see it's a bunch of 1 minute bears. I normally look for a W, but when this was live, I'm like, nah, I didn't really see a clean W, and that was because of 9:30 and the volume. It didn't really give time to create, a W formation. I also try to look back and say, like, damn, where could I have gotten in? And that's where I did a trading view entry, where I said, all right, if I get in here, I could have gotten in here. My stop loss was down here, which is 28 pips. I normally go for 30 pips. And so I'm like, all right, cool. If I'd have entered there, that would have worked out. That could have worked out. Cool, that would have been perfect. But it still wasn't like my entry criteria, where I normally look for the W, the neckline of the W, crossing over, the EMA, the whole nine. I didn't really get that, but this still lined up. It still looked good. It still was a good trade, but due to the fact it was near 9:30, like, this could have happened near news as well, which could have prevented me from entering. But I could say I managed myself. I didn't chase it. I didn't get FOMO or nothing like that. It was just like, all right, that left. It already left. So I'm just watching it go down. It's like, damn, that was a good move. But after that, you got the 15-minute. I mentioned the 15-minute pullback candle being a signal for me, but I also use the 1 hour pullback as a signal as well. Most of the time, if the 15-minute pullback fails, I'll look for a 1 hour pullback. But with this example, the 15-minute didn't fail. It's just that a 1 hour pullback was presented as well. So that 1 hour at 10 o'clock, pretty much at 10 o'clock, after that 9:30, that whole move, at 10 o'clock, price just dropped. And that's where the 1 hour pullback was created, because at the whole from 10 to 11, it was just a bear drop. Price pulled back. So then at 11 is where the 1 hour pullback prints. Same way I did with the 15-minute. I drew a horizontal line at the low of the 1 hour. Same way I drew at the low of the 15-minute. But instead of going to the 1 minute, I use the 5 minute when I get a 1 hour pullback. Right? So as you can see here, this is a M. This M is a part of that pullback bear, bear drop from 10 o'clock to 11. That's an M, and then you get a W. This W is a part of the signal. Same way with a one minute. If I see a W on a 1 minute after a 15-minute pullback, that's my sign. That's my signal to get in. But I have to wait for the W to complete, and I have to wait for it to complete, and the right leg of that W to close inside of the 20 EMA. That's just a part of the rules. So I got the 1 hour pullback, and then I got to drop into the 5 minute. I got a W. I drew the neckline of the W to confirm that this is a W. I could either trade it I could have just taken it here once price closed inside of the 20 EMA as my entry, or I could wait for price to break above the neckline and retest the neckline for entry. Here I didn't really wait. I think my entry was at 11:01. I think I entered on the 1 minute. I didn't wait for it to break the neckline and retest. I just looked at it like, look, the W is already there. Price is above the 20 EMA. I'm entering. So I entered. Price went up a little bit. It retested the neckline. That was, like I mentioned in the community post, that was my opportunity for a second entry, but I didn't take the trade because I'm just like, what if it does drop? I don't really want to have two entries. It's a Monday. I don't want to like have two entries in there, but it would have actually worked out for me. So, but it's cool. I had the one in there. Price started going up. Like I mentioned, it gave me 38 pips from my entry. I think I managed a lot of it on a 1 minute, and this thing don't stop doing that. This is where I mentioned that it went up 38 pips. It went this high. That was like 38 pips from the entry, this high. And like I stated, that once it gave me 38 pips, it pulled back and started consolidating. So I'm in this consolidation for about, not in the consolidation, but from entry to consolidation, that was about an hour and a half that went by. And I'm looking at price just go sideways like this, and I'm like, it's no volume. So I'm like, it made me want to get out.